Hello everyone, and welcome to Hack.com's weekly crypto wrap-up. My name is Sam Borgi, Chief Editor at Hacked, signing on at around 11:25 p.m. Eastern Standard Time on Friday. Thank you for joining us this evening, this morning, this afternoon, wherever you may be around the world. I know Hack.com has a global audience, and we thank you for your continued support. Every week, we like to give you just a brief recap of the market-moving events of the past 7 days. We like to draw your attention to what were some of the catalysts that impacted the cryptocurrency market, the broader financial markets over the past week. And our goal, of course, is to look at some of the major news items that shook the market, as well as the broader sentiment surrounding cryptos and what you can expect to see as we head into next week. If you have any questions or comments, please email me at sam@hack.com or leave a message in the box below, whether it's on YouTube or on hack.com. So the agenda, our weekly wrap-up is pretty straightforward. We want to give you a week in review, look at some of the major movements in the market, focusing, of course, on global cryptocurrency space, Bitcoin, Ethereum, and the broader altcoin universe. We also want to give you a recap of hack.com and draw your attention to some of the upcoming themes that could impact your trading over the next week. Now, we are currently in the midst of one of the largest rebounds in the cryptocurrency market that we've seen in recent history. Cryptos have added over $200 billion since the April 6th swing low. Now, I mentioned that it's a rebound. I'm talking about a large rebound in the market. As you all know, 2017 was characterized by huge gains in cryptocurrency. I mean, it's arguable that 2017 was a year like no other for cryptocurrency, right? Because prior to 2017, we all knew about Bitcoin. We all knew about this thing called cryptocurrency, but it didn't really gain the prominence and the mainstream attention until the bull market that we saw in 2017. And we did see a lot of dips last year, but nothing as prolonged as the one that we saw in the first quarter. However, over the past 4 weeks, we have recovered over $200 billion in market cap. This past week, we saw gains of about $50 billion, over 12% for the global cryptocurrency space. The market peaked above $460 billion on Friday, with Bitcoin, Ethereum, and the major altcoins leading the way. Bitcoin extended its gains above 9,700 after establishing its narrowest trading range in about 6 months. So Bitcoin has had remarkable stability by Bitcoin standards. Going back about a week and a half, we wrote about it on hack.com about how over the past 8 or 9 sessions, Bitcoin has traded within a narrow range. I mean, you can call it a narrow range, you can call it stability, you can call it a long-term recovery, but overall, for crypto traders, seeing that kind of stability in Bitcoin is a refresher, given the volatility that we've been used to in this market. So positive developments there. We saw Ethereum also rocket more than 20% to test $800 on Friday. It actually briefly traded above $800 earlier in the day, but at the time of this presentation, it was trading just below that level. As you all know, Ethereum is the second largest crypto by market cap. It added billions to its market cap this past week, despite some negative news headlines surrounding it. And what are those? We'll talk about them now. So one of the biggest news items of the week that we covered was the fact that the US SEC is broadening its investigation into Ethereum as well as other cryptocurrencies. Now, based on the reports that we've established and based on what we've written on Hacked, the SEC is looking at multiple cryptocurrencies to see if they satisfy the criteria or the definition of a security. But the main focus has been on Ethereum for some reason. Obviously, if you're a proponent of Ethereum, you will say that Ether is not a security because it's too decentralized, right? I mean, different protocols use Ethereum to launch their own tokens. The Ethereum protocol is too decentralized to be considered a security. That differs from, for example, Ripple XRP, which is controlled majority-wise by the Ripple company in San Francisco. So we know the former chair of the CFTC earlier this week, or it could have been last week. He said that Ethereum and Ripple are likely securities and they're likely non-compliant securities. But that was his opinion. He's no longer at the commodity futures trading commission. So, but that could just be some of the rumblings and discussions happening at the regulatory level. The SEC is clamping down, of course, on ICOs and is now looking more closely at Ethereum and other cryptocurrencies. We also know that the messaging app Telegram, which of course houses many ICO chat rooms, has canceled plans for a public ICO after it raised $1.7 billion through private sales. Obviously, we don't know much about the specifics about Telegram's ICO, given the fact that it's been so ironclad. Nobody's saying anything about it from the company. But based on the research that we've seen, $1.7 billion has already been raised, and they feel they don't need to do a public sale anymore. Earlier, the ICO was pegged at around $2.1 billion. It was believed that Telegram wanted to raise $2.1 billion, but it seems to have been satisfied with the private sale. About 200 investors participated, so they contributed huge sums of money to this project as Telegram rolls out its Telegram Open Network. Obviously, as we know more, we'll inform you. Based on the rumblings that I've heard and what we've covered a few months ago, the TON cryptocurrency will launch sometime this year, before the end of the year. Of course, one of the biggest market-moving events of the week was Goldman Sachs entering the cryptocurrency market. I mean, we've had this in the spotlight for quite a while. We know that middle of last month, Goldman hired a cryptocurrency trader to head its digital asset division. And we also know that through various reports, it was planning to offer a trading desk by June of this year. It seems like Goldman will begin by acting as a market maker for Bitcoin futures contracts before scaling up its business in digital assets. Of course, this is absolutely huge news. Goldman Sachs is one of the most prominent banks in the world and one of the leaders on Wall Street. You got to believe that the likes of Citi, JP Morgan, Bank of America, all these guys are going to maybe look at crypto more urgently now that Goldman has entered the market. It'll be interesting to see what JP Morgan does, given the fact that its head, Jamie Dimon, has been extremely critical of Bitcoin. So, huge news when it comes to institutional adoption of crypto. We cover that all week long on Hacked. And here's a visual representation of Bitcoin's price movements over the past 5 days or so. As you can see, prices peaked above 9,700 as momentum continued to pour into the world's biggest crypto asset. A look at the broader market, of which Bitcoin accounts for about 36%, peaked at around $461 billion on Friday. At the time that I put this presentation together, it was around $455 billion. In early April the 6th, we bottomed at around $249 billion. So it's been a tremendous month for the cryptocurrency market. So having covered cryptos, Bitcoin, Ethereum, and so on, we also want to touch upon stocks. We are covering stock markets and commodities much more carefully now on Hacked. We do a lot of technical analysis of the major indices in the US, the Dow, the Nasdaq, and the S&P 500. We saw stocks struggle throughout the week before reversing losses on Friday. Huge gains reported for the S&P, the Dow, and the Nasdaq. They each gained between 1.3 and 1.7% on Friday. Apple led the recovery, hitting new record highs following its earnings call. We also know Apple reported a bigger than expected decline in iPhone sales. Nevertheless, stocks rose sharply on Friday as volatility plummeted. We saw the VIX briefly touch its lowest level since January as of Friday, hitting below 11. At the close, it closed at around 14.77, I believe, which is significantly below the historical average. In terms of corporate earnings, we did see some corporate earnings reports miss forecasts this week. We did see some disappointing scorecards come out, but overall, the picture is overwhelmingly positive. 81% of S&P 500 companies have reported so far. Their blended earnings growth rate, I believe, is around 24%, according to FactSet. That's on track for the best quarter since the third quarter of 2010. So year-over-year growth on the corporate front is positive. The Federal Reserve left interest rates on hold, but they gave little doubt that gradual rate hikes are coming. So expect the Fed to raise rates in June and again at least one more time next year or before the end of the year. Non-farm payrolls on Friday missed forecast. There was a lot of positive chatter about the unemployment rate. U.S. unemployment hit 3.9% from 4.1%, which is the lowest in nearly 2 decades. However, if you actually look at the data, you'll find that the unemployment rate was dragged lower by a decline in workforce participation. If you're familiar with how unemployment is calculated, we simply look at the percentage of the workforce that is either employed or actively searching for work. So you have to be in the workforce to be considered unemployed, right? If you get the Labor Department survey every month and you say, I'm not in the workforce, you don't count as unemployed, right? So the percentage of Americans in the workforce, either employed or actively searching for work, declined by around 236,000 last month, which largely explains, or at least partly explains, the drop in unemployment that we saw. A recap of Hacked, the ICO analysis articles are coming at a steady pace. We saw Sandblock, Creator AI, as well as Aramco make its way through the markets this week. We're releasing one a day consistently. Let us know if you like what you see. If you have any suggestions for ICOs, Workplace is the place to convey them. In terms of the most read articles of the week, we had a piece on institutional demand for Ripple and why it's growing. We covered that earlier as we see more companies, more banks adopt the Ripple protocol for transfer payments. Not so much XRP, but the underlying technology behind XRP. We had some speculation about why Zcash could be better than Bitcoin. Interesting one, trade recommendation, the New Zealand dollar and the Indian rupee was also one of the most hotly read articles of the week. An Egyptian billionaire just bet $2.85 billion on gold. That's half his net worth, an article that I covered a few days ago. So there are a lot of bullish bets growing for gold. If you take a look at the U.S. economy, the path of inflation, interest rates, many people are starting to turn their head toward commodities, specifically gold. And of course, we had another trade recommendation for Ripple that was very well received from an eyeball perspective. So in terms of what to watch moving forward, the next major milestone now is 500 billion. Will the market hit it next week, or will we see a correction? We're seeing huge gains over the past 4 weeks. So keep your eye on the $500 billion mark as cryptos continue to regain momentum. Institutional adoption is always front of mind. We saw Goldman Sachs enter the market. Now we're looking at maybe a ripple effect or a domino effect elsewhere in the institutional sphere. Of course, we're constantly watching the evolution of U.S. regulation of the cryptocurrency market, with the SEC quietly looking at Ethereum and other cryptos. Of course, corporate earnings continue next week, although they begin to die down over that period. Economic data usually isn't as active in the second week of the month, but that's always front of mind, especially for those of us looking to evaluate the performance of the U.S. economy and the broader economic landscape as well. That covers it, everyone. Thank you for joining us. Again, if you have any questions or comments, my email is sam@hack.com. Visit us for more information. If you like this webinar, please subscribe. Let us know your thoughts, and we'll catch you next time. Take care.